This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled higher on Friday, up about 6% on a week-on-week basis, as worries about supply from the Middle East mounted and as raining outages tightened refined products markets. Brent crude futures settled up 56 cents, or 0.7%, at $82.19 a barrel. U.S. West Texas Intermediate crude futures settled up 62 cents or 0.8%, at $76.84 a barrel. Oil futures rose throughout the week, buoyed after Israeli Prime Minister Benjamin Netanyahu's rejection of a Hamas ceasefire proposal on Wednesday. This week's rise followed a 7% loss in the prior week.
The collapse of U.S. natural gas prices this week elevated the oil-to-gas ratio to its highest since May 2012, which should prompt energy firms to drill for more oil and less gas. Gas prices collapsed to a three-year low for a third day in a row on Friday, having fallen by 28% so far this year, on near-record output and as mostly warmer than normal weather this winter depressed demand for heating. That caused utilities to leave more gas in storage than usual this winter. Analysts forecast that stockpiles were currently around 15% higher than normal for this time of year. Oil futures, meanwhile, were up about 6% so far in 2024.
Moving on to the top news in the energy sector.
The U.S. Environmental Protection Agency, EPA, and the Department of Energy released a notice of intent on Friday to help fund projects aimed at reducing methane emissions from the oil and gas sectors. The notice was issued to give applicants enough time to prepare their proposals and form partnerships if needed in anticipation of the upcoming issuance of the funding opportunity announcement, the agency added. Methane is a climate superpollutant that is more potent than carbon dioxide, EPA said in the release. Emissions from power plants have fallen sharply in 2023 in the 10 U.S. states participating in the Good Neighbor plan, but the program has not yet gone ahead in 12 other states.
U.S. energy firms this week added oil and natural gas rigs for the third time in 4 weeks, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, rose by 4 to 623 in the week to February 9, its highest since mid-December. The U.S. oil and gas rig count dropped about 20% in 2023 after rising by 33% in 2022 and 67% in 2021. Due to a decline in oil and gas prices, higher labor and equipment costs from soaring inflation and as companies focused more on paying down debt and boosting shareholder returns instead of raising output. Next, we have the top news in metal markets. China returned to being a major net importer of refined zinc last year after a brief inversion of historical trade flows in 2022. A combination of Western smelter closures and snarled shipping logistics that year led to record-high physical premiums, with Chinese exports serving to rebalance the global market. The smelter problems haven't gone away. Indeed, Nyrstar announced last month it was fully idling its Boodle plant in the Netherlands. But Western demand for zinc is lackluster, particularly from the key construction sector, and China is once again soaking up Western surplus.
Copper prices extended losses on Friday to their weakest in nearly 3 months as U.S. speculators unleashed bearish bets despite news that top metals consumer China had bolstered its economy with financing measures. Zinc and lead touched fresh lows as gains in inventories highlighted weak demand and oversupply. 3-month copper on the LME was down 0.2% at $8,177 per metric ton at 1700 GMT, its lowest since November 14. The contract has lost 3.6% so far this week, and is set for its biggest weekly loss since last May. U.S. COMEX copper futures dropped 0.6% to $3.68 a lb.
We will now look at the top news in the agricultural sector.
Cotton jumped to an almost 15-month high on Friday on technical buying, supported by higher oil prices and the equity market. Cotton contracts for March rose 2.08 cents to 91.18 cents per pound by 11:03 a.m. Eastern Time, 16:03 GMT, after hitting their highest since November 16, 2022. The contract was en route for its best week since August 11th. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.